because like, even if you're just analyzing the economy of Canada, period, like housing just plays such a big role. So you ultimately always end up at having that discussion, right? Like, because it's a big part
Oh
of the
yeah.
GDP and it's what attracts a lot of capital into the country. People come here to consume housing. Like, we're not that resource rich. Well, I mean, maybe we are and I'm blind to it, but we're not that, that's not our role in the global economy anymore. I think it's like we're exporting freedom, perhaps a better brand of freedom than America right now. And people want to come here and consume our houses, right? And so,
Wow, I think you just summarized the entire Canadian economy in
yeah,
12 seconds.
yeah,
That
yeah.
was impressive. Yeah, so not only is housing actually a key component to the Canadian economy, but what I find, I'm a global strategist, and I have teams in London, Hong Kong, the U.S. And I've always been in a global role. I remember back in 2012 being in, San Francisco talking to hedge funds, and these guys were actually looking to short the Canadian dollar off of housing concerns. When you
Right.
talk to what we call like so-called macro tourists who are looking to trade Canadian assets, the global perception is that Canada's housing market is kind of going to be the key driver that makes or breaks Canada. So you have no choice but to be watching it really closely. And I would probably say that the global conversation is overinflating the importance of housing a touch, even though it's really critical. But you're not getting through the role of an economist if you don't have a really good sense of what's going on in the housing market right now.
Yeah. Yeah. I mean, I guess it is sort of one of our core competencies, right, as an economy. And do you get the feeling, in like a historical context, that a lot of this is just because we're like very early in our, let's say, like stages of capitalism, that like, this is when you saw like booms in, and this is pretty off script by comparison to the things that I mentioned I was going to talk to you about, but like, is it just we're earlier along than like, European areas where, they're, you look at like Frankfurt or Munich where, we're like, are we heading towards that ultimate European housing model where it's high institutional ownership, low home ownership or end user, I guess, owner
Mm.
operator kind of thing? Like, and are we just earlier in that stage, even than different places in the US, as an example?
Well, certainly Toronto is, and what we're likely to see in the next couple of years is another one of these moments. Do we actually manage to attract the immigration, and particularly the tech immigration, to make Toronto the world-class city that, Pearson Airport wants it to look like?
Yeah.
So, there's a lot of really credible housing economists who will say, you think Toronto is expensive now, wait 10 years, we will be New York or London. Now, however, I think there are some caveats to that.
Right.
One is that in the next year or two, I do suspect that we're going to have some adjustments, and not broadly across the whole market, but the main support behind particularly the Toronto market and the Vancouver market was immigration and international students. And we've basically put a complete hold on that. And I don't know the future direction of immigration policy in this country. I mean, nobody really knows that. It's going to be
Mm.
pretty hard to bring in huge amounts of immigration when unemployment rates are a double digit.
Right.
So that's a really key variable that's unknown, and it's going to be driven by policy. So much of, where are we in this cycle, and does Toronto become the world-class city like Frankfurt or New York or London, is going to depend on that outlook. It's going to depend on regulations. You talk about, are we exporting a better way of life? Well, part of that is going to be addressing the cost of living in Ontario, and that will range from childcare to utilities bills. The reason that I talk about childcare all the time is not because I'm like, think this is this huge social issue, but because Canada has an opportunity to become this beacon that you all want to live in. And until
Yeah.
we address the cost of living component, which is not just housing centric, then we're not quite going to get there. So, you could reasonably make that argument that we're just earlier on and we're the next New York City of the world. But there's a couple obstacles we have to get through first before we get there.
And you mentioned the childcare piece, and I do actually think it's a pretty important one to discuss, especially like for a lot of millennials who, any millennial that I know that has a family now has left the city. And I think that we're talking about like now in the context of COVID and things like that, you're seeing a lot of focus around this urban exodus phenomenon, whether or not it's going to happen. And you've got boomers who actually sort of have like a health reason for potentially leaving the city. And then millennials, I think people have always just assumed when they look at them as this category of, consumers in the economy, that I don't know, for some reason, we're just not going to want that suburban white picket fence when we have kids, and we're all going to raise our kids in condos. But it doesn't, it's appearing as we progress down this population pyramid that that's potentially less and less true. And we're just having kids later, maybe, or whatever it is. How much of it do you like graduate? How much do you think that this is going to graduate into the geography of these like urban agglomerations like Toronto, people moving into the suburbs or moving to different cities where the cost of living is cheaper and the lifestyle is better? Like how do you see that all taking shape potentially, especially for our generation?
Yeah, well, when I look at the data, we can talk a lot about preferences. So millennials have perhaps, although some demographers are fighting back against that idea, have preferences. Like millennials are going to care about being close to a really good coffee shop. Like they want to have Jimmy's coffee in the yellow capped cup when they go downtown. But actually what we're seeing in Toronto is that preferences aren't going to be the dominating factor. I want to live in downtown Toronto, but it's not possible when childcare is running you $2,000 a month on a good day. And if you want to rent, half of a semi-detached, it's going to run you $3,500. The cost of childcare for me is essentially, when you run the numbers from the time your child is born to when they go into kindergarten, it's going to cost you $60,000 of after-tax income per kid in downtown Toronto. So now we're getting to the point where if you even move to Ajax, those costs start to fall. So when people talk about, there's affordability crisis in Toronto, my comment to them is always, stop focusing on housing being the only component. If we did nothing about housing, but we had affordable childcare like we do in Quebec, I don't know that you'd see that urban exodus or vice versa. So it's a combination of all of these components. Now, that said, when we talk about housing, and I know you know this, but just everybody's like, what's going to happen to the housing market? It's so much more nuanced and segmented than people believe. If you ask me to bet, I would say suburban housing does well in this environment and rental condos do terribly. How does that shake out on national data? Maybe it comes out looking flat, but that's not going to be the underlying story. So for me, whether or not we see the urban exodus is really a function of how do we address these other components of cost of living. It isn't just housing related, it's all of these components put together. My sense is that there was already a movement for work from home. So I'll give you my example, a personal example. We were, before COVID, looking out in Oshawa because that kind of fit our range of what was reasonable for our household. And I was adapting to the idea that it was going to be to get to my office in Manulife, an hour and a half to and from it. And that kind of hurts my heart a bit. I want to see my son at least once a day. But I was sort of acclimatizing to that idea. And then we had a change in circumstances. We're actually now going to be in Montreal for a year. And this transition to realizing I can live in a suburban environment in 25 minutes with better transit and daycare that runs me $8 a day is such a monumental mental shift that I suspect we're going to see people who are saying, I thought I had to give in to the idea to live an hour and a half outside the city, but there are other cities that allow me to do that differently. A huge part of whether or not that happens is whether Canadian companies actually have some sort of appetite to be in smaller cities. Calgary, for example, Winnipeg, Quebec City, Montreal have this tremendous opportunity now to attract talent and companies. But a lot of it's going to be regulatory, a lot of it's going to be tax-based, a lot of it is going to be based off of corporate decisions. But I think, millennials in Toronto believed that they only had one choice. As more choices open up, some of them are still going to choose downtown Toronto. Some of them are still going to choose Oshawa, and others are going to choose to make a different sort of lifestyle change.
Yeah. I think that a bit of a function of that in the consumer psychology element is like this feeling of almost like invincibility that a lot of millennials had. And now like you just front run the cost of your life. Like we would almost be backwards by comparison to our parents' generation, spend all the money now and spend the rest of your life making it all back. And now they're thinking like, I think that they just sort of got this sense of economic mortality. It's like, oh, maybe I should start thinking about saving money for the future. And maybe I should see where I can adapt the cost structure of my existence a little bit, or.
Oh, yeah. And you're actually tapping into a concept that economists call precautionary savings, which tends to happen after large crises. And the few examples we have of pandemics show us this as well, that when people experience an economic shock, I mean, how terrifying is it to wake up one day and have 40% of the Canadian labor force somehow economically impacted enough to apply for the Canadian Emergency Response Benefit. And it happens so fast. I mean, this is not something that you forget, that your your circumstances can change violently very quickly. So historically, we see that in response to that, people say, you know what, I do want a 3-month emergency fund. I don't want to be stretched to the limit, and I could lose my job at any second. And this concept of rolling pandemics, I think, is also a little bit worrisome. The amount of people I know who, bought above ground pools just in case daycares close again, or those who are kind of stockpiling just in case there's a second wave of COVID, or those who believe that, a vaccine isn't going to come about, just like there are several situations that never produced vaccines. These are environments where, I wouldn't be surprised if we see behavioral changes over the long run. And I think the more important behavioral changes are really not like, oh, people are going to work from home more and therefore not go to Starbucks as often. The behavioral changes are people are going to want to take on less debt, no matter how low interest rates are. They're going to want to save more. And we're going to be in an environment where people are faced with this idea of deglobalization and rising prices just a little bit more. And those are more sinister, less obvious changes from COVID, but they're the ones that are probably more impactful than just, I don't go into work 5 days a week, I go into work 3 days a week. Does that make sense?
Yeah, no, it does for sure. And I think that those are like the ones that you can't really like accurately predict for, because they're a function of sort of like the whole aggregate consumer sentiment that, doesn't show up so much in the data because it's a little bit too qualitative. Beyond that, like I think there's a couple of notes that I put in the questions that I had intended to ask. There's a lot of discussion around what are the biggest vulnerabilities that we're seeing as a result of COVID. And the policy environment that followed it. Have they created potentially their own set of challenges? I mean, I've been pretty impressed at the policies ability to keep things at bay and even actually create obviously a stronger housing market coming out of this than, at least for certain areas, than we did going into it. But are we kicking the can down the road, so to speak? And do things like I think the big ones that I've heard talked about are, migration being stifled as a result of travel restrictions. I think CMHC's concept of the deferral cliff, new household formation, potentially net negative for millennials, going back to home with mom and dad.
People not having as many babies. Is that what you're saying?
Well, not just that part, but also like couples, like as an example, like, unforming and going back to home with mom and dad because the economics of it are better, right? Like, potential leaving Toronto and living.
Divorcing fewer babies and everyone moving back home to their families.
Yeah, like I mean, are those like I'm certainly not qualified to answer these questions, but like, are those things like, and I guess which one would you say is posing sort of the biggest threats?
They're fairly obvious developments, right? Like I have one toddler, and the idea of having 2 children at home would be overwhelming and impossible in this environment. So people are, of course, going to postpone fertility choices. Luckily, my husband and I have managed to make it through here, but I am right now in my parents' house as I await finding a new home because there was a giant yard, a different room for me to have an office. And it was entirely different than being in my tiny, expensive home in downtown Toronto. So even our lived experiences, don't need an economics degree to see what is obvious here. To your original point, which is, what monster have we created with policy, right? That's kind of the point you're getting to, is a giant monster. The alternative, and it's not really an economist's place to say this, but what was the alternative? And what we tend to see in bond markets is that actually bond markets and market participants and economists are generally more comfortable with huge upfront responses from policymakers as opposed to trickling in and letting the situation worsen. And the biggest risk that we have in the United States is that the unemployment insurance top-up is eliminated on July 31st. It expires and it may not be fulfilled. So there is definitely going to be a challenge with exit strategy. And the more immediate exit strategy, and when I say more immediate, I'm thinking the 5 to 10 year horizon, is going to be, how do we have central banks stop buying corporate bonds? What happens? So they can allow these corporate bonds to mature, but then where do these companies get financing if they've been relying on central banks
Right.
to go that way. So we saw from the U.S. experience, it's incredibly difficult to tighten and reduce balance sheets. They've just created massive market dislocations. It's slowed the economy, and it'll happen in Canada, the United States, and every major economy when they get to that point too. The idea would be we can wait until the economy is much stronger before we do that. I don't think the economy is going to be strong enough to do that for at least 5 years. So, to me, that says interest rates at or near zero, in some countries below zero, for at least 5 years. And then we go through this extremely slow unraveling. What took 2 months to implement will take probably 10 years to unwind. And I say that without hyperbole. The second challenge is, what do we do with huge amounts of government debt? So in the United States, for example, they have the highest debt to GDP ratios they've ever seen, like literally going back to the 1800s.
Right.
What do? Well, one of the things that's happening here, and it is relevant to everyday Canadians and Americans, is they are issuing huge amounts of bonds. They are putting out huge supply of bonds, and central banks are buying them. But it's creating kind of this steepening of the yield curve. And that's really important for a health of financial institutions, but it also can't happen too quickly. The other issue is, well, what do we do when we have huge amounts of government debt? Now, my parents will say, oh, your son's going to pay higher taxes. That's what's going to happen here. And that might be true. That might be a direction we go. Others might say, well, we need to spend less on things that maybe don't matter as much to us. So we'll have to do something like that. And then, of course, there's this new wave of thinking, which is, don't worry about it. Grow your economy really well. And your debt to GDP, which is a numerator denominator, just grow that denominator real fast, and you'll kind of grow your way out of debt. And then we have modern monetary theory, which says, don't worry about it at all. Doesn't matter. Not going to change anything. That is a gross oversimplification, by the way. Read the research out there. Read Stephanie Kelton. I do think there's some merit in some of those ideas. But we're now going to be faced with this esoteric question that's very unlike the post-World War II period, which was balanced budgets for everything. We're now going to be facing bigger questions. Is, maybe we can run sizable deficits. Maybe it was worth it, and maybe we're okay that we saved ourselves from a depression if we have to pay for it a little bit later. I really do not think anyone needs to be worried about taxes going up in the next year or two, including in the United States, were Biden to win. I mean, he has this, his policy platform is to raise corporate taxes. It's just not going to happen when the economy is that weak. So I hear that concern. I think about that concern. As much as I'd like to be retired in 20 years, I probably have another 40 years to work before I'm done here. So, we'll be talking about it many times. Maybe you'll even invite me back to this podcast at some point.
Of course.
And we'll still be talking about government debt. But, these are the new challenges and exit strategies. We don't need to worry about them now, but we're going to have to worry about them a lot at a certain point.
Do you feel like it's worth discussing now, like what shape that could take? Like how, does this, with the MMT discussion, there's a lot of people alluding to the fact that eventually that does translate into inflation when that money ends up in the, you're basically asset inflating the market, and then eventually it'll come into play. And how long does it take? Well, we don't know, because this is a pretty new concept. Or is it taxation where this impacts us? Because I think both are sort of alluding to a recessionary environment that has a little bit more longevity to it than what the average or the layperson would think is going to happen. And just the government spent more of money that wasn't there, so I'm going to have to give that back to them at some point. And like, is there a more nuanced discussion? Is it even worth worrying about right now, or do we kind of just wait and see?
So you must have taken some econ classes, because you're referencing Ricardian equivalence, which is this very nerdy econ concept. And I will commend you on making it sound very fun and appealing. Either that, or you're a natural economist and you don't even know it. So, there's a couple things in your question here, and one is inflation. I gotta tell you, I don't go a day without thinking about inflation, but I think about it from so many different perspectives. People, if you ask people, what's the cost of living in your life? Everyone I ask will say, it's going up. I got to pay more for childcare. It cost me so much money for broccoli the other day. You wouldn't believe it. I had to pay so much more money because I was buying something. It was coming from China and they had to reroute it because of COVID. I went to my hairdresser and they had to raise prices because they can take fewer people. Everybody feels the cost of living rising all around them. And yet inflation is apparently nowhere. And central banks are all like, we can't drum up enough inflation. If you told people the cost of living is rising at 1.5%, they would laugh at you.
Yeah.
So we have this massive disconnect between this concept of measured inflation and what's actually happened. If you are measuring inflation based off of the stock market, oh boy, we've got hyperinflation, right? One of the challenges facing us in the very near term, I don't know, like I'm a stickler for like coupon codes. So I sign up for all the, I've got the Gap coupon codes. I got the Brick because I'm in the market for a new chest freezer. Every day I open my email and I've got like 50% off plus extra 10% off plus we'll give you a free TV. They're so desperate to sell things. That's such a good indication that companies are nervous. And it's also a good indication of deflation. It's companies saying, we need to get rid of this inventory. We will sell at a cost. Every time you see an email saying 60% off, buy now, or 2 for 1, that's deflation talking to you. So that's what we're looking at in the very near term. We also have these powerful deflationary forces. Do you ever, go to a store? I don't know, what kind of things? Do you look like someone who's like maybe handy? Do you buy tools? What do you
That's pretty
buy?
much the only thing I buy in a retail environment is like tools
Nailed
and like house stuff. I literally avoid retail at all costs otherwise. So
we don't even know each other, and I knew you were in the market for a drill. Okay, so this is actually a true story. I went to go buy a drill at Canadian Tire, and I'm standing in the aisle, and I should have brought you with me because I had no idea what I'm doing. And I'm looking at all the drills and I'm thinking, screw this. I go look on Amazon to see if I can get the same drill for cheaper. And I could. So I leave Canadian Tire, I've wasted the gas, and I buy it online instead of the next day. That is deflationary. And not just that you can buy stuff online, that's not the deflationary impact. The deflationary impact is full pricing knowledge. I know what drills sell in London, England. I could tell you how much you could buy one in Singapore. I could do a currency conversion and apply duties, and you would know right away, what pricing information is. It really limits the ability of companies to raise prices over time. Canadian Tire cannot raise the price of a drill because I'm just going to go on Amazon and do it. So there's this constant will match prices or give it to you lower. There's also the demographics component. I mean, you've talked about fewer children being born. Fewer children and lower fertility rates is profoundly deflationary, and an older aging population, very deflationary. So we have these powerful forces that are keeping inflation low that didn't exist in the 70s when we saw hyperinflation. That said, there are some light, moderate, medium inflationary pressures that are going to build here, but they're not coming from the places that people really think they are coming from. One of my biggest concerns is deglobalization. So for basically since 1930s, and in every economics textbook I've ever read, free trade is the be-all, end-all, and the ultimate economic response. Well, a lot of people are questioning that and saying this didn't lead to the outcomes that I want. So in order to discourage companies from buying the cheapest labor or goods from abroad, we're going to tariff them. And then all of a sudden the discussion is, well, it actually costs me, applying a tariff costs me the same. Maybe I could get a good for $50 from China or $80 from the US. In the first paradigm, I'm going to buy it from China. You apply a $30 tariff, now it's a toss-up. But now we've had a second shock, which is not only is it more expensive for me to source from abroad, but all of a sudden the world could freeze and I might not be able to get my intermediary goods. Maybe I'm making a car, but I don't know anything about cars. The transmission that I was going to get from Asia, please don't use that as an example. I don't think that's how cars work. I can't get it anymore, right? So if you're a company now and you're sitting in Canada or the United States, you might be thinking, you know what? It costs way more money for me to source this domestically, but it's almost an insurance policy, right? Like I'll pay more now, but then I don't have to worry about my supply chain just like crapping out on me. And that's really important for Canadians because it effectively means some of that cost will be passed on to us. So if it costs the supplier $120 to make it, they might eat in some of that, but some of it gets passed on to us. And that's how deglobalization is actually inflationary. And we're going to see the things that were traditionally built abroad, maybe built more at home, maybe built more in the United States, prices are going to start to rise from that sense. And for me, that's the more sinister element of inflation. The second area of inflation, we're so tempted to say quantitative easing and monetary policy is inflationary. Since about 1995, we can show that that relationship has broken down. But what's hella inflationary? Fiscal policy, government spending. That is inflationary. Here's an example. I have a cousin who has a small firm in Florida, and he's ready because people in Florida are just like, yeah, let's go outside. It's fine. So in Florida, he wants to open up his company, but he can't hire people because they're getting really sizable unemployment insurance top up, and people are pretty happy staying at home right now, which, by the way, is a flaw in that system. But what does he do? He raises his wages. He says, listen, I got to compete with the government, so I'm going to actually pay you more so that the spread between the two is less high. That's inflationary. That's government money that is pushing out and changing incentive behaviors. So what does that lead to? Well, in my forecast, take that for whatever you want, that leads me to about 2.5% CPI in 2023. What does that really mean? It means that this year we're facing 0% inflation. Next year gets a bit better. And by 2023, we start to worry about some more inflationary pressures. That's what central banks are going to look at. That's what I'm going to fill into my forecast chart that I publish. But for you and me in our day-to-day lives, yeah, we have to start worrying about prices that are going to go up. And some things prices are going to go up and other things prices are not. I wouldn't be surprised if services prices rise. So, the things like restaurants or getting your hair done, for example, these types of things will see prices rise. Some goods that we produce will not, and some goods that are maybe impacted by deglobalization will. So you're going to see pockets, very similar to housing. We can make this headline call, but it's so much more nuanced and sector driven than it initially appears. I don't even remember your initial question. I hope that I answered it.
You answered it a lot.
You just set me off.
No, I like that though.
Okay.
I mean, that's exactly what I'm looking for, is really just these open-ended dialogues. So there's a lot to unpack there for me, and there's a lot that I want to chat about that you mentioned. So I guess the first piece is when you talked a little bit about I think originally you touched on sort of price shopping around for things, and there's no longer like this information asymmetry, let's say, that an industry such as the real estate industry would have operated on. You can, like you said, in real time basically understand the pricing structure of pretty much anything you're looking to purchase. When you talk about repatriation of the supply chain, so like bringing back a lot of these goods, with you referred to it as like deglobalization, does that also create, let's say, a cycle in which, because that even if the product's going up in cost, but it's also, keeping wages on domestic soil. So now all of a sudden, let's say the average wage would grow as well. So you're putting more money into the domestic economy, and then, there's more dollars that you're competing with to purchase that product. Like, does it kind of compound in that respect?
You've just described inflation.
Right.
Yeah, you've just described inflation. You've essentially, you're describing cost push inflation.
Right.
So, when the cost of things rise and then people demand, higher wages to compensate for that higher cost of living. So, you and I, we've grown up in a world, and everyone I know, whether they're a nurse or they work in HR, at the end of the year when they get their increase, they'll say to me, well, I got the standard 2%, or God forbid, I didn't even get my 2%. I don't even know that people really know what that means.
Right.
What does it mean? Doesn't even keep up with inflation. And that's on the economics and education system as an aside, but I'll get to that later. So people have so ingrained themselves and internalized the idea of 2% inflation that they don't dare even ask. The idea that actually the cost of living would have climbed more than 2%, is not reflected in our underlying data, but ultimately is not something that people are allowing themselves to accept. And this is why I suspect that as the cost of living has just tornadoed out of control in places like Toronto and Vancouver, wages have not kept up, in part because of this reason. But if we start to see some of that inflationary components in things like food and more in housing, then people will probably stand up and say, I need more. Alternatively, they may get into the streets and say, enough is enough. Your childcare costs are so egregious that even the top 1% can barely afford childcare. This is effectively, you know what we're discussing, right? We're basically discussing the social unrest we're witnessing in the United States.
Right.
This is the source of that the cost of living has risen so significantly that people may not know the economics word for it. They may not know what cost of living really gets described as. They may not know what inflation is, but they know that they do not have the same standard of life as their parents, and it has to be corrected. That is exactly what the populist policies, deglobalization, and the rise of social unrest, which in my view are very justified, is effectively happening in the US. It's happening in Europe, and I suspect we're going to see it pop up in many more places. We should not believe that Canada is immune to that, particularly in places where the cost of living and wages have had such a dramatic wedge.
Mm-hmm. It's interesting. I would agree for sure. And I think that, like our generation does struggle a lot with, it feels like the hand that we were dealt by our forefathers in, the economic sense is close to utterly impossible. Like I would say that, I feel like I'm in a relatively good position for somebody in my age. I have a family and I live in a nice house and all of that stuff. But even then at the end of the year, I still feel like I don't have two pennies to rub together. Right. And I think that that's just such a common phenomena for millennials, and there's this expectation that we have to participate in the economy almost in like the same way that our parents did. It was like, just go out and get a job. It's that easy. Right. And it's like, well, I mean, I think that things are quite a bit different. And I think that that's been ignored by a lot of people. And now I would agree with you. It's built up into this thing where they have to yell louder and get more and more, demanding of the attention of people to fix the problem. Right.
Well, part of this is actually, I'm going to put this back on economists, really, because if you think about what the post-World War II economy looks like, it was predominantly an environment where labor force participation rates were rising, where, we had this profound movement where we discovered something amazing, which is that, women can work. Cool discovery, and they'll do it for money. And so suddenly throughout the 50s, 60s, and 70s, we saw this surge in economic growth because we had people who had been put back to work. We had a period where we had just come out of the 1940s with huge amounts of government spending. We were in kind of peak globalization, so prices were falling. This was an economic environment that was very unique in many ways from past historical economic environments. But now we're using the same system, the same, in French you would call it un cadre, framework, I guess. Sorry, that's my Quebec roots showing there a little
totally
bit.
Okay.
You would this framework that we use to understand the economy from the 1940s to, I'm going to say, probably the early 2000s is less relevant now, and yet we're told and we're expected to behave in the same ways. So one of the really big asks for the economic system and for economists is to recognize this pivotal inflection point. Some of it is this digitalization of the economy, as we talked about, full knowledge of prices and the inability to raise them. Some of them is, this massive, I shouldn't call it a discovery, but I think for the economics profession, it can be labeled that way, of income inequality and racial disparity. These are things that were not addressed in kind of the traditional post-World War II economics. The idea that you could have, stratification economics is something that's being watched a little bit more. Deglobalization being a really key one, the rise of China from an industrial superpower into a services-based economy. These were not the economic principles that guided the 1950s to the 1980s, but they are part of what I'll call this new economy or this transition. So we really have to use this incredible tool that is economics to look at this through a new lens. And I think we need different perspectives. And, different perspectives can come from all different areas. They can still come from people who've been in the industry for 40 years and are what you might consider the traditional demographic. And there are people who are the traditional economics demographic who do a really good job of pointing out these changes. But we need a new framework, right? We don't live the same world as our parents. It's also, I just want to say this, as much as I like to blame like my emotional eating on my mother, they didn't give us this. We're not victims of our parents' economy. This is a natural evolution. Economies have changed for centuries and centuries. They evolve. This is why we all have to study economic history. I'm now ranting. I'll leave it there. But, my key point is, this is a different economy, and it requires different perspectives and different tools.
Yeah, they also have to deal with it too, right? Like it's not like you're driving to downtown Toronto and you're like, oh, I'm stuck in traffic. It's like, no, you are traffic, right? Like we're all in this together. Like, and so
Yeah.
it's not like they just like left us this burden. Like they also exist within this economy, and a lot of them, are like we're young and we can work. And a lot of them, like they don't want to do that. And if right now, like with housing being one of the big pieces of the puzzle for the Canadian economy, can a lot of these men in their 50s and 60s still be working in the trades, which is where you're going to make a lot of money right now? Probably not.
Or
right?
what about if you have a pension that you were relying on and interest
Right.
rates are zero and 20% of the global government bond market is negative rates?
Right.
This is
Yeah.
this is
And then the other
also a
challenge,
consequence. What are you supposed to do?
the other challenge around that pension piece too is like, I mean, even on the real estate side, like it's, there are obviously merchant developers for a lot of these pension funds in the housing space, but like you look at a lot of the assets that are going to be very impacted by this in the core are in that space, right? Like a lot of these office buildings and things like that from the work from home piece could create some challenges there just on the micro sense, right?
Yeah,
Shopping malls, et
100%.
cetera. You did mention fiscal policy, and I've had this discussion with a couple people on Twitter and stuff like that, where the government, I could really personally see the at all levels of government really trying to spend money on infrastructure for two reasons. One being obviously creating jobs and putting that money to work. But two, like, I think that, the cost structure of real estate, like if we or housing, if we examine like the supply chain of housing, one of the big pieces is those, the machine trades or like and if you can protect that scarcity of labor and keep that construction cost like relatively high, then essentially like you could kind of prop up technically the especially when we're talking about like the urban properties, condos, et cetera, where they're essentially an infrastructure project, right? Do you see anything like in that respect? And I don't know if that question even really makes sense, but like, is that a double whammy from a policy perspective if the government were to go that direction to try and keep the economy stimulated, but also keep that sense of scarcity in the condo trade space, let's say?
Okay, so I think you're too smart for me, and I got lost halfway through.
I don't know if
What
that's the
you're
case. I probably just didn't ask.
describing,
So let's say like
um,
the Fed decides to invest in infrastructure because they think it's going to bring a lot back to the cities. But it's also going to keep a lot of these people employed. Like if we start seeing the pullback that a lot of people are anticipating on condo demand as an example, and then all of a sudden that starts to trickle down into, okay, now there's less demand for the trades in that space. And then the cost structure of housing starts to erode. Is that like by design? Is that just like, traditional, okay, like 90s infrastructure spending, or like the old, like they're just trying to basically keep the economy spending? Or do you get the sense, and this was just a theory of mine, that they're almost trying to keep that balance that protects the cost structure of housing so that things can't really reach that free fall that would be very bad for Canada?
I do not think housing is at all a policy goal right now.
Right.
Protecting households from losing their jobs so that they can pay their mortgage is. Making sure that people who deserve to have a home can have access to affordable housing, that's a CMHC goal, is a goal. Right now, and probably for the next year or two, the key policy goal is going to be making sure that people have jobs and get rehired. How do you do that? You support businesses directly. You give them wage subsidies. You tell them, if you hire, we're going to give you these goals. That's a more intrinsic way to keep the economy running. Now, at the same time, there's this concept of never waste a good crisis. I think Churchill said that, but maybe we just attribute to him because he's a cool historical figure. So what we are going to see is that we have these extraordinarily low interest rates. It doesn't cost the government a lot of money to borrow right now, just like it wouldn't cost me or you as much money to take out a mortgage. So there is going to be a push for infrastructure spending. That infrastructure spending, though, is much more likely to be towards public infrastructure. So that's highways, water, transit systems. That's more what we're going to see in this environment. And the idea is, if you could do that, if you can have a better transit system, for example, it increases the total economy's productivity. If you could get people from, I keep picking on Oshawa, let's go a different one. Let's say you can get people from Markham down to Bay and King in half the time. It's a great experience. You move people around, you get people out of the city, you encourage the urban exodus, and then all of a sudden costs kind of fall a little bit more everywhere, and you have a more productive society. That's one side of it. I suspect in Canada, we're also going to see a green push. So the money is going to be spent towards trying to help rotate our economy into what many believe is a new type of economy that's more green sensitive. Now, it's not my place to say that's a good or bad idea. That just seems to be the direction that we're heading towards. But I would be very surprised if this is at any level of government, a government that wants house prices to be higher. In fact, I would say that if house prices fell 10 to 15%, and it didn't result in, a huge amount of Canadians that were dramatically underwater, and it improved affordability, that you would probably have a lot of very happy policymakers. If you went to some key leaders and said home prices are going to be down 15%, I suspect they would say that supports the affordability crisis.
Interesting.
Again, that's very regionally different, right? Home prices down 15% in Calgary is much more problematic than home prices down 15% in downtown Toronto.
Well, I think that that's like a distinction
from a policy perspective.
Yeah, I think that that's a distinction that a lot of people have been not really paid, maybe been attentive enough to, that, like, if we see a big correction in Toronto, just as like it can pretty easily skew the data, where CMHC's forecast of 9 to 19% or whatever it is could be correct if you just see in an isolated, all condos in Toronto and Vancouver drop 30 or 40%. And I'm just like pulling that number out of my ass. But if that were to happen, you could still be, because they're so numerous and because they're so valuable right now, they're inflated, that it could pretty easily push the data towards that forecast that CMHC's put out there. But I would agree that on the micro, it is a lot more nuanced than that. The curiosity. So I guess my question originally wasn't so much that is the government going to be building housing, but like, I think that there's a big overlap between basically like the trades that would build a condo building and the trades that would build a highway, let's say, or build a subway, and, like your Acon, et cetera. And so do you think that, and maybe it's not even really worth asking, but do you think that there's an element of them trying to recreate that scarcity, like in the labor economy, for people who are capable of bringing housing on in scale, to kind of like choke up the supply chain, so that, and again, maybe you answered it already by saying, yeah, they don't want house prices to accelerate, so maybe they'll try and keep the supply pipeline full. I just didn't know, when I saw that infrastructure proposal, or just like the thought process and the dialogue happening, to me it screamed, yeah, they want to pull people away from the housing side to keep that piece of the supply chain kind of in balance if demand starts to taper off. And sorry if that's super confusing. It could just be too, maybe I'm
no,
just.
I don't think the policies are that targeted. If you were to ask me what are the key policy perspectives, the key policy perspectives are make sure people have jobs, number one.
Yeah.
Number two, continue to diversify the economy. Because what if there was some very strange exogenous shock, and it could be immigration changes and the housing market falls out from under us. Policymakers would want to ensure that if housing market collapses, the entire economy doesn't go under. And in order to do that, it requires diversification, particularly in an environment where oil and gas is a smaller share of our economy. So policy is always going to be targeted towards diversifying away from the sector that's most important for us, and that's housing. And number three, you're always going to have a call for more supply. So the need for more supply will be continuous and loud, probably for a long time. So those are going to be the main policy goals. But for now, the idea is we can borrow money cheap, we can improve our infrastructure broadly so that people can get to work more, they can be better at their jobs when they get there, and we kind of have an economy that accepts a variety of other major sectors. That would be what I see as the main policy objectives behind a lot of this broad infrastructure. I think the situation you're describing is maybe a little too cute for what's really going on under the surface, which is not nearly as, I don't know how to put this, detailed as the way that you're describing it. I'm trying to be very generous to policymakers.
Yeah, fair enough. I appreciate the diplomacy anyway. So then I guess the one piece that we haven't really addressed in regards to, the general economy and then also the housing piece is household debt, right? It's, and where do you see things from that perspective? I mean, heading into this, it was probably potentially the worst timing ever for an exogenous shock like COVID to hit the Canadian economy. Maybe I'm wrong, but we had record household debt above what the US was seeing in 07, 08. Obviously, we didn't have ninja loans or adjustable rate mortgages or any of those other, pieces to deal with. But how does that element play into the next 6 months as we start to see the exhaustion of the helicopter money or pseudo UBI policy that we're seeing, and then also deferrals coming back in and courts opening and rents dropping? Like, what's the biggest vulnerability from your perspective, I guess, moving in the next 6 to 12 months?
Yeah, so I've told this story publicly before, but it's a true story. It's relevant. I remember when I was younger, my father used to always say to me, always buy a house you can't afford because prices always go up and your income always goes up. This was like his big investment advice to me. And he would say it all the time. And I think for so many North Americans up until 2008, this was like a basic pillar of personal finance, right? Buy the biggest house you can afford or one you can't afford because it always goes up in value. In 2008, Americans learned a really hard lesson, which is that home prices don't always go up. For a whole generation of Americans, that was a complete shift in their perceptions of personal finance. Canadians did not really learn that lesson. And that lesson is still there for us to be learned. Now, again, you and I have talked about it. Certain segments will learn that lesson, not all of them. This is a different market for a variety of reasons. But there's still a psychology that exists in Canada that housing is one of the best possible choices that you could make. And depending on your personal circumstances, it may be, right?
Yeah.
The end result of that is that Americans made the decision to save for bigger down payments, to not over-lever, and experience this very sizable deleveraging where a lot of them they have what are called, jingle mail in the US. You're like, oh, can't pay for my house, drop the keys in the bank's mailbox. That exists in the US, except for some pockets in Canada, it doesn't exist here. So, effectively, if you borrowed $200,000 to buy a house in Iowa, it's a pretty big house in Iowa, and you're like, oh, can't pay it, drop off your keys, you delevered, right? Mm-hmm. Canada did never experience that. And as a result, we've continued to lever up. And those two psychological differences had led to this very wide divergence in how much debt Canadians versus Americans have. Now, at the same time, there's some caveats behind this. And I don't love that we just berate Canadians for how much debt they have like it's our fault. first of all, and I've written about this in the Globe and Mail, the data does not support the idea that we're all just going to take out debt and buying Yeezys and just being fruitless with our money.
Right. Yeah,
Cost of living has risen really extensively. So
yeah.
there's some underlying evidence that we're not wasteful. We're just trying to pay for life. Like, can we live? Or I just need a HELOC so I can pay for my childcare, for goodness sake, you know?
Yeah.
The other component is that when you look at debt relative to assets, so how much do we actually own relative to how much debt we have? Canada and the US are relatively the same. It's not so bad.
Right.
The biggest difference is that Canadians actually are paying, we're paying about $14 on every $100 for the debt, for our debt each month. If you take home $100, you're paying about $14 for the interest and principal on all your debt, from your mortgage to your HELOC or whatever. Because interest rates have been extraordinarily low, we've had more debt, but it hasn't cost us more. And, you know, for you and me, and maybe for your clients too, they're not really thinking about the size of their mortgage. They're thinking about the mortgage payment. Can I afford the mortgage payment every month? It's the same thing with a line of credit. I don't really think about how much is on my line of credit. I think about what my payment is. If my payment suddenly doubles or triples, then I'm in trouble. So for Canadians with extraordinarily low interest rates, we aren't likely to suffer this large shock right now unless we've lost our jobs. If you lose your job and you can't pay your mortgage, you're in a totally different situation. But what's so critical here is actually the cost of debt. So debt isn't really what scares me about the Canadian economy. What really makes me worry is the future of immigration. And I don't really have an answer on this. What I do know is that if you pull immigration, you're going to hurt our housing markets really sizably. But you might also hurt innovation. On the flip side, if you engage at the same levels of immigration we've had before, you reinflate our housing market, making it very unaffordable, and you're probably going to end up in a situation where your unemployment levels are much higher because we just have too many people and not enough jobs for those people. So I don't know which side of the coin to fall on. I really don't. What I know is that there are pluses and minuses to both, but either decision in the post-COVID world changes the economy. I'm worried about what deglobalization means for Canadian companies. I suspect what we're going to see is, you know, for years we've talked about wanting to diversify our economy away from trade with the U.S. What I suspect is that we see more trading blocs. So U.S. and Canada trading more, not less. Asia trading more, not less. Some inflationary powers from that. And then I worry about some other things, like what does digitalization of an economy really mean, and how susceptible does that make us to things like cyber attacks? Basically, you know, before COVID and years of my career, you know, you speak at all these conferences and people always ask you, what are you most afraid of? What keeps you up at night? And my answer for a long time was, I'm really not afraid of what hits me between the eyes. I'm worried about what hits me in the back of the head. Right. What did I never see coming? And guess what nobody saw coming? A global pandemic.
Right.
That was not in anyone's risk models. So what really worries me is what I can't think of. So I try to think, you know, what does a cyber attack mean? What does another pandemic mean? What does, now there's like bats or pigs or something that have bubonic plague. I read about that the other day. You know, I don't even know if that's real.
No, yeah, I think a kid just died from it yesterday. From the bubonic plague.
Okay.
He ate a marmot from the mountains.
So that's terrible.
I know,
right?
Yeah,
like,
no, it's crazy. I think about like
the types of things.
I'm the same, right? Like there's all those existential risks like that you think about, like, you know, sometimes I'm like reading about this technological singularity and I'm like, well, what, like, okay, so I'm going to be uploaded into some like digital consciousness. We're going to be living in the matrix in like 25 years, according to like some of these models. I'm like, so none of this matters, right? It's like, just make sure you can afford to be worthy of being uploaded or cryogenically frozen or whatever, right? Who knows? But like, that's what, you know, you start getting a little bit out of control. Anyway, I want to be mindful of your time. I really enjoyed this discussion. It was super thought provoking. I feel like I could do this for the next 4 hours probably, but you know, in the interest of your time, is there anything that you wanted to discuss that you feel like we didn't get to? I know I didn't organize my conversation as planned. So is there anything that you wanted to talk about that we didn't cover?
I would just reinforce one point, which is that, you know, you and I met over Twitter, and Twitter is a world where people make, you know, broad sweeping statements and can't provide the nuance. But the world that we're heading into now is one of incredible nuance. whether you're looking at the housing market or inflation or the economy, those headline numbers are not going to tell you the underlying story. And it's a story that requires new perspective and a new economics. And there are amazing economists out there who think in new ways. There are even old school economists who, when you probe them in the right ways, will talk about this change. That I think it's fantastic that you're using your perspective to think about these issues, that you're talking to kind of mainstream economists like me, and as much as I hate to admit it, that's still what I am out here. So I really commend you for doing that, and I hope you'll have me back.
Yeah, no, I would absolutely love to. I think as this whole thing evolves, it's always nice to check in and see how, like I was talking to a lot of people at the beginning of COVID, and we made a couple of assumptions, obviously. And now I'm just starting this weekend to start recording a lot of those follow-up conversations. So yeah, I'd love to do that in the future. We could maybe schedule a time to have a follow-up conversation and see whether or not our conversation was relevant to the future in hindsight, right?
Hope so. Well, that sounds great.
Okay. If people want to reach out to you to pick your brain, as I have, is Twitter the best medium, or how would you like people
Yeah,
to reach you?
follow me on Twitter. I gotta say, I'm a little calmer because I don't know what it is. People are meaner lately. But definitely, if you're open to having discussions and do so kindly, I am here for that. I'm here every day, all day, to talk about economics. So at Frances Donald is the best place to find me, and hopefully we can keep in touch.
Okay, amazing. Thank you so much for your time. I really appreciate it.
Of course, it's been really fun.
Likewise. Yeah, have a great weekend.